Hello, great to see you again. Good morning.
Thanks so much for having me.
So people are trying to establish new lines on this valuation reset. Others argue, look, nothing's really going to matter until we know whether or not the Fed comes to some kind of realization about the damage done to these names through the path of higher rates. Is this an area where you can start to get selective or not?
Well, I do think that given that we've seen just such a massive sell-off and just the tumultuous environment right now that we're in the markets, I would advise a little bit of caution. I think we're excited to understand the true direction for the Fed. The one thing that we do know is that this administration has not been as focused on the stock market as the prior administration. Now, we have continuity with the Fed chairman. However, given what we've seen in the first few weeks, the early indications are that the Fed will move to have some rate increases. I think that will give some clarity. However, look, this is what we're seeing right now. This is the context for the market. Within the area of tech, we have a couple of different types of investors. We have the multi-sector investors who are moving out of tech because with a rising interest rate environment, they typically move over to other sectors that benefit from rising interest rates, right? Those would be financials, insurance. And then on the folks that do focus on tech, they're moving into some of the more bellwether big tech names. And that's because what we see is that high interest rate environments really punish the growth stocks, the tech stocks in particular, that are the main drivers of growth. And in particular, we have a lot of these companies that are out there that have gone public recently that have really been trading off of their revenue growth as opposed to profitability. Now, if we take a look back, and we even saw this starting back in last year in 21, really the market started to shift more to benefiting and rewarding those that actually had the free cash flow, right? The actual profitability, the margins. And those are the larger tech names. And we see that reflected in how those names like Microsoft, like Salesforce, like Alphabet, Google, have been punished, but not punished as much as some of the newer entrants to the public markets, which are thinly margined, right? They have thin margins, or some of them might not even be profitable. So, I think that's what we're seeing. When we think about how these investors value these growth stocks, they're basically looking out into the future and discounting back. And so when a rising interest rate environment happens, there's a higher cost of capital, therefore compressing some of those margins that they're valued on.
Sure. I want to read you Webbush this morning. They write that the underlying growth drivers of the tech space, which, of course, we've talked about for a long time, remain unmatched to anything we've seen since the mid-1990s, and they're not being priced into stocks. So what is on the line tonight, say, with regard to Microsoft, in that they could come out and say, look, things look a little bit soft on the margin, or they could say things continue to be on a tear? I mean, how much of that is going to drive sentiment in the days to come?
Yeah, what an amazing story. Look, Microsoft is one of these unbelievable companies that has been able to maintain an impressive growth rate. A lot of that has come through the cloud. What we're expecting is that we'll still continue to see double-digit growth, mainly driven by their cloud business. I guess one of the questions that we have with Microsoft in particular with regard to their cloud business is when we think about the big drivers of the pandemic, and particularly this move towards remote and distributed workforces, that benefited Microsoft's business as well as a lot of other companies' businesses. But in particular for Microsoft, how much of that demand was actually pulled forward from 22 and 23 into 21. And, we'll need to get a better understanding of that. And I think also, another question that a lot of investors are going to have for Microsoft is, with this acquisition of Activision and Blizzard, what is their strategy moving forward around consumer as well?
Right.